All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everybody. Today is April 3rd, 2025, and it is a bloodbath out there today in the markets, guys. We finally got the tariff announcement, the reciprocal tariffs on Liberation Day. Do you feel liberated? I don't think many people feel liberated right now. No, sir. So, look, yesterday there was a little bit of optimism throughout the day. We had some buying was going on. There were some rumors that, maybe there's going to be like this 10% flat tariff across the board. And everybody was all like, kumbaya, yeah, it's going to be great. And Tom Lee was on CNBC saying, all right, buy the dip. I had a parrot once that kind of did the same thing. But look, guys, they were wrong. We got the announcement yesterday after the market closed, and it was worse. It was much worse, way worse than even some of the worst estimates that people have said. President Trump was holding up those placards in his Rose Garden ceremony yesterday, and the numbers on there were staggering. We're going to talk about some of those numbers. We're going to talk about how they arrived at some of those numbers, which is very interesting, especially because if you're one of these countries trying to figure out how do we get out of this, it doesn't leave you a lot of wiggle room. This was absolutely a bludgeoning over the head of globalism. That's the only way to interpret this. Well, no, not the only way. Another way to interpret this is the biggest tax increase in American history. Let's face facts here, folks. Let's call this what it is. Because remember, we're the ones that are going to pay these tariffs. So as you're looking at these numbers today, I want you to imagine the crap you buy at Walmart being imported from these countries and what that price tag on the shelf underneath it is going to do once these numbers work their way into the consumer prices. Oh boy, these are going to be bad, guys. Now, just as important as what was in the tariffs yesterday is what was not in the tariffs yesterday. And we're going to talk about those. Now, does that mean there's no tariffs on those things? No, it doesn't, because President Trump has said in some of his previous comments that there's going to be specific tariffs on things like steel, aluminum, semiconductors. Well, those were all exempt from what he announced yesterday. But if we use yesterday's announcement as a template for what these might look like, then they're probably going to be worse than people feared, because the other tariffs were worse than people feared. So there was a little bit of relief in certain sectors of the market yesterday saying, don't worry, semiconductors wasn't included. They told us already there's going to be a tax on semiconductors. And considering that the other tariffs are higher than expected, it's logical to assume that the semiconductor tariffs will follow suit. And therefore, this blatant weak default to optimism for anything involving tech stocks, guys, you're going to get burned here if you're not careful. So we're going to go into the details of this stuff. We're going to show you the specifics of it, how bad it is. We're going to spend a lot of time on the market's reaction because markets are a mess this morning. Things are all over the place. Watch Japan. That yen is strengthening like crazy here. We are back to August 2nd levels in the yen, August 2nd lows in the yen. You remember the day after that, August 5th, the next trading day, we had a bloodbath over the unwind of the yen carry trade. So this tariff freakout may trigger a yen freakout, and Michael Guyette is going to be just unbearable if that happens. Also, guys, we have some other not specific tariff news that, if it wasn't for the tariff story, would be front page news this morning going on. OPEC is out this morning talking about oil production increases. Now, this is largely expected increases in oil production, but it's much bigger. OPEC is increasing supply by 3 times as much as they previously told us. And the price of oil is appropriately reacting sharply to the downside on top of fears of a global slowdown. Now, is this tariff-related news? Is OPEC taking a shot at U.S. energy producers in retaliation for some of these tariffs? That's entirely possible. So maybe we got like your 2015 freak out in the oil patch coming on top of your tariffs and your yen carry trade. Isn't this starting to sound like fun? Gold prices getting absolutely destroyed. Silver even worse this morning. WTF is going on there. I'll tell you what I think is happening there. Another huge story this morning in Bloomberg. Microsoft is pulling back on data centers all over the world. Jakarta, Chicago, Arizona, California, the UK, all over the world, Microsoft is getting out of this great game of CapEx chicken. There was a lot of people like Jim Cramer and some of those people were very dismissive of these TD Cowen analyst reports that have been coming out over the course of the last few months that have been suggesting Microsoft was backing away from the AI bubble. Bloomberg is confirming it this morning. If it wasn't for tariffs, that story alone would be enough to take the NASDAQ down probably 150 points by itself. That is a huge story, and it's getting lost in the weeds this morning of all of this tariff mayhem. On top of that, there was a story yesterday about Google being in talks with CoreWeave to lease their data center space. Now, the cover for that, everybody is saying, oh, what's going on with Google and their data centers? This shows that demand is insane and all these silly tech bro AI bubble talking points. I have a different take on that Google story with CoreWeave, and it's very similar to what's going on with Microsoft. I don't think this is the good news they're trying to spin that as, although I got to admit I am somewhat biased. You may have noticed I'm very skeptical of the AI bubble. We're going to talk about that story. Challenger job cuts, 275,000, up from 172,000 in February. That is the highest announced job cuts since May of 2020. Remember, that was the peak COVID hysteria. If you take out COVID, this would be the biggest Challenger job cuts number ever. And it's all federal, guys. This is the Doge effects showing in the jobs numbers. Now, we've also got initial jobless claims came out this morning, down a little bit. Continuing jobless claims up quite a bit, up 56,000, much higher than expected. People having a hard time finding a job. Guys, we have that all-important non-farm payrolls report coming out tomorrow. We need a good jobs number tomorrow. I mean, the market is going to need a good number with all of this bad news that's going on right now. If we throw some labor problems on top of that, well, let's just say there's a lot of ingredients are mixing together that probably shouldn't be mixed right now. Guys, it is a heavy news day, and I also just want to mention, because of the mayhem we have going on in markets right now and the unpredictability of things, it's going to be a very busy day. Mish and I talked this morning. We are going to come back at 4 p.m. Eastern time today, and we are going to do a market wrap-up show, a second live stream today, because something tells me a lot is going to happen between now and 4 p.m. Is it going to be good? Is it going to be bad? I don't know, but we have a lot to digest, so we'll be back this afternoon. Put it on your calendar. But in the meantime, why don't we shrink my big melon of a head and let's see what is going on in markets this morning. Oh, do we have to? Yes, we do. The S&P 500 down 210 points, 3.7% lower. By the way, like and subscribe. I forgot to mention that, especially if you're new here, hit that subscribe button. We do this every day, guys. We don't do this down 200 points in the S&P every day, but we're here every day doing this. So come have your coffee with the melon heads. It's a bloodbath out there, guys. 3.75% lower for the S&P 500. This is the worst day since August 5th, at least. It's probably even worse than that. The Dow, 1,250 points lower, just off the lows of the morning here, down 2.9%. You know, if the Tom Lee parrot dip buyers are out there, they are taking the morning off. We'll see what happens when the opening bell rings. Now, look at the NASDAQ. Oh, accelerating to the downside. 860 points lower for the NASDAQ. Almost 4.4% in the red. Stocks are getting crushed today. Now, also getting crushed today is the U.S. dollar. Look at the Dixie, down 218 basis points. 101.49. This was 104 a couple of days ago, guys. This thing is getting destroyed here. Now, what is going on? Why is the dollar weakening? Well, we've got fears of global growth, but I also think we have got money going home. When we look at some of the other statistics today, you're going to see it looks like you've got money leaving the dollar, heading back to Japan, heading back to Europe. Just take a look at this chart here, guys. I mean, this is scary here. The first thing I got to show you, look at this red candle, USD JPY, the number of yen it takes to make $1. When you see this chart heading lower, this is the yen strengthening against the dollar. All right. And these are daily candles and just a great big middle finger pointing down on the USD JPY chart here, 145.8. We are now lower than we were on August 2nd. We are back into August 5th territory on the USD JPY chart, guys. So that yen carry trade, that's fair game here if we start to see that panic kick in. Remember, August 5th was the last time we had one of these morning shows where everybody was freaking out. And they took away the sell button on August 5th. Remember, all the brokerages went down for maintenance at the same time. You couldn't sell stocks. Like that was an accident on a day when there was a widespread sell-off going on in stocks. We could very quickly get back there. We're back to August 5th levels. The yen is strengthening. Money is leaving the States and heading back to Japan. That's putting pressure on the Dixie. It's also leaving the States and heading back to Europe. Look at this one. Look at this big red candle here on the USD EUR chart. We're seeing the euro strengthen dramatically against the dollar. Now, this was all set in motion. You guys remember that blow up in the Oval Office between Trump, Vance, and Zelensky? That set in motion these talks about Europe rearming and how they're going to have to rebuild their own military and possibly NATO falling apart. Well, when you add trade wars on top of that, that sound you hear, that sucking sound, that is money leaving the States and heading back to Europe this morning, is driving the euro higher against the dollar. Now, if you look at bonds, some of this appears to be by design, because one of the things Secretary Treasury Scott Bessent has been talking about since the Trump administration took power is how they need to get long-term interest rates lower because they have Janet Yellen's pile of short-term debt, a holdover from the Biden administration, that they need to refinance to a longer duration and hopefully at a lower interest rate. Now, in order to do that, you need to get long-term interest rates lower. And would you look at that this morning? Long-term interest rates are lower. They are a lot lower. The 30-year Treasury down 10 basis points, almost 10 and a half points, 4.445 for the 30-year. The 10 years at 4.021, 17 and a half points lower for the 10-year Treasury. That is a big move. Now, that being said, the 17 basis points, I'd actually expect that to be a little bit bigger this morning, considering what we're seeing in stocks. The amount of selling we're seeing in stocks here, there is a little bit of a flight to safety going on. Obviously, 17 basis points is a huge move, but considering a 4.3% decline in the NASDAQ, you'd think we'd be talking about 25, almost 30 basis points on the 10-year here, but we're not. I think, again, that flow of money from the U.S. back to Japan and Europe is partially offsetting some of the flight to safety that you would otherwise see in the bond market this morning. On the 2-year, we've got 3.743. That's down 16 points. The biggest mover is the 5-year here, 20 and a half basis points lower. People are selling stocks and they're running to bonds, guys. So if you've been bidding up tech stocks this whole time, congratulations. Ultimately, what you've been doing is providing exit liquidity to people who are now helping to refinance the U.S. government's debt, because that's what's happening right now. Tech stocks are melting down and they're lending it to the government instead. The 1-month Treasury, even that's one's a little bit lower here, 4.309. That's down by a fraction of 1 point. All right, so look, we've got a strongly weaker dollar this morning. We've got interest rates are way lower. We've got stocks are selling off. We've got the appearance, all the hallmarks of a flight to safety. Surely gold and silver are ripping higher on this news, right? No, the opposite. Gold and silver are getting massacred right now. WTF is going on. Spot gold, 3,059, down 73 bucks, 2.3% lower. Spot silver, 31.81, down $2.05, 6.1% lower. What is going on here with yields lower, with the dollar lower? These should be ripping. Well, guys, let me just tell you, one of the things that was exempt, and we'll show this later, bullion specifically was exempt from the tariffs that were announced yesterday. And the reason why gold has been ripping like crazy for the last few months is because gold has been leaving London, coming to the U.S. for fear of U.S. tariffs on bullion. Well, they exempted them yesterday, and there's nothing else in the cards, no other plans to put tariffs on bullion. And so it looks like gold and silver are exempt. Now, we have had for the last 6 months or so a dramatic flow of gold from London to New York to the U.S. COMEX vaults. Now, I want you to imagine, have you guys ever been using your sink and real quick you slam off the faucet, you close the valve just a little too fast, and you hear this big thud coming from under the floorboards? That's called water hammer, because water's incompressible, and when it's flowing and then all of a sudden you shut off the valve, you create this shock wave that rattles through the pipes, and if you're not careful, you can actually blow out your pipes when you do that. I think what we're seeing in the gold and silver market right now is something similar to Waterhammer. We had this dramatic flow of gold and silver from London to the United States. And then on Trump's announcement yesterday, that is abruptly coming to a halt, like instantly. And you can see it because the front month contracts are falling faster than the spot prices. That's that exchange for physical premium is just evaporating out of thin air. Now, that's my theory about what's going on here this morning. I've got Bob Coleman coming on the channel tomorrow afternoon. We'll probably air it maybe Saturday morning to talk about what's going on this week in the gold market. You're not going to want to miss that one. But a very contrary move, I don't think anybody expected gold and silver to sell off like this on these tariffs. I certainly didn't. Maybe there's somebody out there claiming they saw this coming, whoever they are, I don't know. But silver's also suffering here because silver is largely an industrial metal on top of that. And we're looking at a slowdown in industrial activity because of the trade war for sure. So silver, that's contributing to silver's outsized move here. You can also see that in copper prices, 3.2% lower this morning. Copper is purely an industrial metal. You've got platinum is lower, 4.3%. Palladium is lower by 5%. And then crude oil, 7.3% lower. Oil leading the way down. And this commodities sell-off here, $66.49. So what's going on with oil? Shout out to Javier Blas, who shared this tweet this morning. The OPEC Plus flood begins. The group is accelerating its oil production hike, bringing forward its May 1st and 3 months worth of its previously planned monthly output hikes. I just want to read this statement that came from OPEC this morning. The 8 OPEC Plus countries, which previously announced additional voluntary adjustments in April and November, namely Saudi Arabia, Russia, Iraq, all these other countries, they are reviewing global market conditions and the outlook in view of the continuing healthy market fundamentals and the positive market outlook. The 8 participating countries will implement a production adjustment of 411,000 barrels per day, equivalent to 3 monthly increments in May of 2025, as detailed in the table below. This comprises the increment originally planned for May in addition to 2 monthly increments. So everybody was expecting OPEC to increase oil production by 138,000 barrels per day every month for the next 3 months. But what OPEC did this morning is they decided we're going to do it all at once. They are going to, it's not quite a dumping because they've been holding this supply back. They're just going to open the valve a lot faster than planned. 411,000 more barrels per day of oil will be hitting the market just as the world economy absorbs this shock of a trade war. So I think we could see oil prices heading sharply lower here on this news. Again, just this would be front page news were it not for the tariffs this morning. Bitcoin also joining in on the sell-off, $81,971 for Bitcoin as priced on Coinbase. Now, if we zoom in a little bit here, look at this needle yesterday, or the wick on that candle from yesterday. Bitcoin was ripping higher above the 200, even the 50-day moving average yesterday on that misplaced optimism about the tariffs. I tell you, the market got this one so wrong yesterday. Everybody was buying, expecting the tariff announcement to be lower than expected, and they got the opposite. That was a rude awakening for markets yesterday around 4:30 p.m. All right, so let's talk about the tariffs and what was actually announced. These are those placards that President Trump held up in the Oval Office or in the Rose Garden yesterday. And just look at some of these numbers here. All right, what you're seeing, here's the country, obviously. Here is the tariffs they are charging. Put a pin in that. We'll be back to those numbers. But most importantly, this is the U.S. reciprocal tariffs. These are the tariffs that we will be placing on all of these countries. 34% tariffs on China. Now, the one thing about China, it was the one country that was singled out. The 34% tariffs on China is in addition to the 20% tariffs that they've already put on Chinese goods. So we're at the end of the day, by the time the dust settles from this, you're looking at 54% tariffs on everything manufactured in China and shipped to the United States. I want you guys to just take stock of what that means for a minute, all right? 54% tariffs on everything coming in from China, which, by the way, is pretty much everything on the shelf at Walmart and the dollar store. I mean, look, the dollar store became the $1.25 store during COVID. It's the $2 store now, like instantly on that. That is shockingly high. Now, you've also got 20% on the European Union. Vietnam getting slammed, 46%. Now, a lot of Chinese manufacturing has been moving to Vietnam to avoid tariffs. Well, out of the pan into the fire because you got 46% tariffs on Vietnam. Now, a lot of people very quickly zoomed in on these Taiwanese tariffs of 32%. Now, that is very high. We get a lot of chips from Taiwan. Put a pin in that, though. We'll be back to that one in a little bit. Also, Japan there, 24%. They also confirmed the 25% tariffs on autos. This is a shock, guys. And if you go down the list here, I mean, you've just got 20s, 36 in Thailand, 32% Indonesia, 49% Cambodia, 37% Bangladesh. I mean, it's pretty obvious here. The Asian countries in particular are getting absolutely crushed. There's this other one here. The South American countries, not so much. South American countries, 10% pretty much across the board. There's some 20s, some 14s. Look, we just don't have that much of a trade deficit with South America. So those tariffs are very low. Now, I want to zoom in on this little part here. I apologize for how fuzzy this is. But this part that I've circled here is important. The tariffs charged to the USA, it notices in fine print there, it says including currency manipulation and trade barriers. That's key text there, right? If you look at this, this little fine print down here, because if you go back, they're talking about how some of these countries, if you look at the tariffs that they're saying these countries charge us, 67% for China, 90% for Vietnam. These countries don't actually charge us 67% tariffs or 90% tariffs. So how are they arriving at this number? What is this, including currency manipulation and trade barriers? How are they quantifying these numbers to arrive at this? And I got to send a shout out to James Surowiecki. He's a reporter for The Atlantic who, within a couple of minutes of these announcements, was able to basically derive the formula of how the Trump administration arrived at these tariffs. And this is pretty much, this shows you what Trump and his people are trying to do here. He says, just figured out where these fake tariff rates come from. They didn't actually calculate tariff rates and non-tariff barriers as they say they did. Instead, for every country, they just took our trade deficit with that country and divided it by the country's exports to us. So say we have a $17.9 billion trade deficit with Indonesia, its exports to us are $28 billion. So $17.9 billion divided by 28 equals 64, which is what the Trump administration then claims is the tariff rate Indonesia charges us. Then what the Trump administration is doing is they're taking half of that amount, and that is the tariff that they're charging that country. Now, this is very interesting here, because if you're, say, Indonesia here, how do you placate President Trump? How do you get out of this? How do you cut some deal? Because what they're saying here, it's not what your actual tariffs are. The bigger informing of your tariff rate is your trade deficit with the United States. And not every trade deficit is being driven by tariffs and monetary manipulation and trade barriers. Some trade deficits are just because they have something we need and we don't really have anything they need. So what they're trying to do here is they're trying to force the trade deficit lower. And if you're Indonesia, what are your options here? How do you get your tariffs on the United States lower? I mean, you have to obviously buy more American stuff. But what are you going to do? Buy more American stuff that you don't need just so your tariffs can go lower? This is horrible for globalism, right? And look, I'm not a big fan of globalism at all, but I'm also not a big fan of tariffs at all. This makes it very hard for these countries that are listed on these placards to get out of this problem. I don't know what they're going to do. I don't know how. I mean, China's just hosed here, 54% tariffs on China. I think the Chinese are going to find, look, this is going to be very painful for us, guys. Let's just say it. I mean, our goods are going to get more expensive. It's not going to be right away, because right now all the stuff that's on the shelves was bought months ago. And a lot of companies have been front running these tariffs. So they stockpiled stuff ahead of the tariffs. So it may take a couple of months for this to show up in the CPI numbers, but the CPI numbers are going to be horrendous this summer. They're going to be really, really bad. It's probably going to be one big step change and then stay put for a while, but that change is going to be big. Now, on top of that, the pain these other countries are going to be feeling. Now, here's a question. Do we need the Chinese crap more, or do the Chinese need our shelves to sell them on more? Well, I guess we're going to find out. Forget your opinion on whether we should be in this trade war or how we got here. The fact of the matter is we are in this trade war now. And once you're in it, how we got here, there's no point in even asking. The point is, like, how do we get out of it? How do we survive it? This is a war of attrition, guys, and it's going to be who can inflict more pain on the other person's citizens. And at the end of the day, this is a massive tax increase, arguably the biggest tax increase in history. Also important here, what was not included in the tariffs. Now, this is some of the text of the tariff relief that came out. Some goods will not be subject to reciprocal tariffs. These include articles subject to 50 USC 1702. I went and looked. That's a code about presidential powers. I don't really know what that specifically means, but they're also calling out certain sectors here that are not subject to these tariff rates. Steel and aluminum tariffs, autos and auto parts. They've already announced what those tariffs are. So those are not going to be in addition to what was just announced. Copper, pharmaceuticals, semiconductors, and lumber are not subject to these tariffs. Now, that's very interesting because the Trump administration has said there will be tariffs on those things, but they haven't yet told us what they're going to be. Now, a lot of people saw this semiconductors being included in the things that the tariffs were not in, and were like, yay, NVIDIA, because every story, no matter what, is bullish NVIDIA somehow. But remember, Trump has specifically said there will be tariffs on semiconductors, and so far the tariffs have been worse than we feared. So when those semiconductor tariffs finally do arrive, I don't think the people in those stocks are going to be celebrating them like they were yesterday. Now, also things that are not included in tariffs is bullion, number 5. That's a big one because the president has said nothing about bullion. He has not said there are going to be tariffs on gold and silver. People have been afraid of that, but there haven't been any promises of bullion tariffs yet. And now he's explicitly excluding them. So I think that right there is why you're seeing this big drop in gold and silver on a day where otherwise you would expect gold and silver to be ripping higher. I think it is the shock and the sudden ending of that flow of metal from London to the United States. Also, energy and certain other minerals that are not available in the United States was exempt, and Canada and Mexico were not included yesterday because the 25% tariffs on Canada and Mexico, it seems fentanyl is really the big driver of those, not reciprocal tariffs, trade deficits, or that. So that's what was in the release yesterday, and that is how the market, at least the indexes and the commodities, are reacting. Now look at some of these stocks here. The opening bell just rang. Apple down 8.2%, trading at $205, right? Because Apple's signature products all manufactured in China. Apple products are going to get a lot more expensive. Nike. Remember Nike CEO a couple years ago? He said Nike is a brand of China, by China, for China, or whatever that silly talking point was. Nike down 12.7% at the opening bell here because all of their clothes are made in countries where these tariffs are hitting the hardest. Amazon down 6.8% this morning. That's interesting. A lot of that stuff sold on Amazon comes from China. $183 a share for Amazon, down 6.6%. NVIDIA is down 6.3% this morning. Not as bad as some of those other names, but keep in mind, a lot of people yesterday were saying, oh, all clear, go buy NVIDIA because they were excluded from tariffs. Well, I think the market's finally starting to realize, well, no, that just means the semiconductor tariffs haven't gotten here yet. And when they do arrive, they're probably going to be even worse. So it's just a bloodbath in stocks this morning, guys. Now, also going on this morning, this would be the biggest story of the day were it not for these tariffs. This is huge. Microsoft pulls back on data centers from Chicago to Jakarta. You have it now confirmed. A lot of people have been theorizing about this because of these TD Cowen analyst notes. The NVIDIA bulls have been crying fake news. It's not real. The company deny it. Well, here it is. in Bloomberg, Microsoft pulling back from data centers. Microsoft, as I predicted, is first to blink in the great game of CapEx chicken that is the AI bubble. Microsoft has pulled back on data center projects around the world, suggesting the company is taking a harder look at its plans to build the server farms powering artificial intelligence and the cloud. The software company has recently halted talks for or delayed development of sites in Indonesia, the UK, Australia, Illinois, North Dakota, and Wisconsin, according to people familiar with the situation. I wonder, are the people familiar with the situation, are they related to those people familiar with the matter? No, I don't know. Microsoft is widely seen as a leader in commercializing AI services, largely thanks to its close partnership with OpenAI. Investors closely track Microsoft's spending plans to get a sense of long-term customer demand for cloud and AI services. It's hard to know how much of the company's data center pullback reflects expectations of diminished demand versus temporary construction challenges, such as shortages of power and building materials. Some investors have interpreted signs of retrenchment as an indication that projected purchases of AI services don't justify Microsoft's massive outlays on server farms. Look, guys, it's obvious that they don't. I mean, at this point, there are no profitable AI companies. The only people that are making money on AI are the people selling the hardware to these data centers that are anticipating future profitable AI companies. Just like in the dot-com bubble, the only people who were making money were the people selling the hardware and the fiber optic cables. The dot-coms were all burning money like crazy. And it's the same thing with these large language models. OpenAI, Scale AI, all these companies, they lose money like crazy. Anthropic and Claude. None of these products make money, but the hardware that enable these products makes a ton of money. It's all fueled by just burning cash in this endless game of CapEx chicken, and Microsoft has had enough of it. Now, this confirms that TD Cowen note. Now we got another story that I think is related to this one yesterday, and I think the market got this one wrong in their blind optimism that was yesterday as well. This is a story that was in the information, which is paywalled right now, so it's in breakingthenews.net here. Google is in talks for NVIDIA AI servers lease from CoreWeave. Now, this is interesting. Google is reportedly in advanced discussions to rent NVIDIA's latest Blackwell AI chips from CoreWeave, a rising cloud provider, as reported by the information on Wednesday, citing sources familiar with the matter. According to the media, the move highlights Google's effort to secure enough chips amid growing demand from its customers. In recent weeks, Google executive have also approached CoreWeave's competitors in search of spare GPUs, signaling supply constraints. Additionally, Google and CoreWeave are exploring a separate agreement in which Google would lease space in CoreWeave's data centers to host its own tensor processing units, suggesting a shortage of internal data center capacity. All right, so the cover story and the market reaction to this was, see, the demand is insane. This goes to show you that we just can't build these things fast enough. In other words, the market saw this story and had the opposite reaction as the Microsoft story. Now, I have another take on this. Because remember, when Microsoft started pulling back from their data centers, the first thing they did was told OpenAI, I think we should see other companies. They cut their exclusivity agreement with OpenAI, and OpenAI had to go sign their own lease with CoreWeave. It was a very big one, and I don't know how they're going to pay for it, but they did. So what was really happening was Microsoft was saying, we are not going to blow any more of our own cash on building out data centers. If you want data centers, go rent them from CoreWeave. Now, here's Google not building data centers, but renting them from CoreWeave. So while everybody else is interpreting this as very bullish, I can't help but look at this in the context of the Microsoft story and say now Google is the second to blink in this great game of CapEx chicken. Why keep burning our own money building our own data centers when we can just rent the compute from CoreWeave's cash burning furnace? Now, I don't know for sure that's happening. We won't know until we start to see those actual CapEx numbers from Google and from Microsoft. But I think these two stories are related. I think it's the same thing, and I think the market reaction to this one is wrong. Now, CoreWeave stock was ripping yesterday, 16% higher after ripping about 50% the day before that. It's down today along with everything else. But all things considered, CoreWeave stock is holding up pretty good this morning. But my opinion on this company, guys, this is a ticking time bomb, a landmine, a lit fuse, however you want to say it. I don't know where this stock is going in the short term, but I can tell you this. Long term, this stock is a zero if NVIDIA doesn't panic acquire it in order to keep it from going belly up. This company is designed to fail. All right, let's talk some real quick numbers that we got here. Challenger job cuts. All right, 257,000. Big jump in job cuts. Guys, it's all federal government jobs. This is the Doge. Now, the important thing, look at this 10-year chart. Here's where we are right now at 275,000. If you take away COVID, if you take away that spike in the vid, this is the highest Challenger job cuts ever. Again, it's all federal. If you take away the federal jobs, there was only like 76,000 job cuts. So this is all the reaction of Doge. I don't think these numbers will be reflected in tomorrow's non-farm payrolls. I think these numbers will take several months before they actually start showing up in jobless numbers or in the unemployment numbers. But that is a big jump. Hundreds of thousands of federal workers. I think they actually quantified it here. 216,000 government job cuts were announced in March. That is huge. That alone right there is at least 0.1, possibly 0.2% increase in unemployment, but it's going to take a while to get here. Now, we also got initial jobless claims this morning. They were actually down a little bit, less than expected, 219,000. Okay, that's not so bad. But look at your continuing jobless claims this morning. That is pretty bad. Continuing claims made a new high, or at least new recent high, 1,903,000 continuing jobless claims. That is up by 56,000. That's the highest we've seen all year. So even though job losses maybe aren't so bad, at least not in the initial claims data, but once people lose their jobs, they are struggling to find a new one. This is not a strong labor market. I don't know how much of this is going to be reflected in those non-farm payrolls numbers, but we need some good news tomorrow on that jobs front. So we'll see what happens. Come on back tomorrow morning for the show because we will be dissecting those jobs numbers in real time just after they hit the market. Hopefully it's going to be good, guys, because the market, this market could really use a break. Let's put it that way. And I just want to say thank you so much to Mr. RB Trash. Welcome. He's now a magnanimous Melonhead. He's upgraded his Melonhead membership. Thank you so much, RB Trash, for supporting the channel. I appreciate that very much, sir. And by the way, I will see you tomorrow on our weekly get-together on Zoom that we do with all the magnanimous Melonheads on YouTube and Patreon. Thank you, sir. Got links down below to all that good stuff. Viv B, thank you so much for gifting 10 Nobody Special Finance memberships. Thank you so much, Viv. Guys, if you got one of those, be sure and let Viv know you are grateful. And thank you so much for supporting the channel. Grumpa, what's going on, Grumps? Thank you, sir, for the super chat. He says Trump has, in essence, shredded the Bretton Woods agreement by imposing tariffs. He is doing this to reduce bond yields and cause deflation. I agree with that. I don't know so much about Bretton Woods. I mean, Bretton Woods died when they closed the gold window. Now, you could argue the descendant of Bretton Woods, the petrodollar, that is really getting clobbered here. So I'm with you on the sentiment. The global order that has established the dollar as the reserve currency of the world is in danger here, guys, big time. And we're seeing this weakening of the dollar today and that money going home. That's real. That is a very real risk. Now, what's he talking about here? He's doing this to reduce bond yields. I agree. And cause deflation. I agree. I do agree with both of those. This government needs interest rates lower and they need asset prices lower. Now, you could argue those two things are kind of inversely correlated, right? Typically, interest rates going lower means asset prices are going higher unless you can cause a stampede to safety, unless you can cause turmoil in the stock market, then those asset prices come down as they sell stocks and the bond prices go up as they buy bonds, bidding down the interest rates on those bonds. And Secretary Bessent has said that's what he wants. He needs to refinance all that short-term debt at a lower rate, at a longer duration in order to bring down the astronomically high interest rate expense. So in other words, what the administration has done here, whether intentional or not, is they have sacrificed the stock market to save the bond market. Very astute observation, Grandpa, and thank you, sir, for supporting the channel. T.A. Chapman, thank you, sir, says, holy shnikes, Hold on to them jobs, everyone. Chaos is a ladder. Very good, little finger. Ugh, I'm a needs a promotion. Look, you could see that in the JOLTS numbers yesterday. Job quits were way down, guys. Jobs are a precious commodity. There's going to be an impact in the job market to these tariffs. Absolutely. In the short term, there's going to be job losses. I think in the long term, the goal is to create manufacturing jobs, but that's going to take time. The pain gets here first, the hurt first, then the good, right? Like when you're going through withdrawal from a drug addiction, it hurts first. The healthy comes later. Maybe those manufacturing jobs come back. That's not a certainty. The pain is a certainty. It is coming, guys. Hang on to them jobs if you got them, and be careful with your cash. Consumer discretionary, things like food, things like energy, actually probably going to get cheaper here. But discretionary things, the stuff in the middle shelves in Walmart, right? Like your blenders, all your clothes, that stuff is going to get so much more expensive. So be careful, guys. Try to plan your budgets, but there's no way to know how much of these price increases are going to be passed on to the consumers, how much are going to be gobbled up or absorbed by smaller profit margins as companies try to capture market share. But it's very unpredictable here. So just be careful, guys. Thank you, T.A. Chapman, for supporting the channel. Steve Woidis says, could we see circuit breakers on markets today? Yeah, we absolutely could. I don't think we've seen them yet. But that is in the cards. Again, we'll be talking about this more at 4 p.m. this afternoon. We're going to do a market wrap-up show today because of how up in the air things are. So will we be talking about circuit breakers at 4 p.m. Eastern time? I don't know. Just have to come back and see. Thank you, Steve. Good question. We just don't know yet. Appreciate the support of the channel. The Beekeeper says the everything bubble is deflating. Today, it sure as heck is. The reset will be painful, but it's absolutely necessary. I agree with that sentiment. I agree with that statement. It's important, though, not to lose sight of what this means. As you study macroeconomics and the more you learn about this thing, there's a tendency to look at people as numbers and to forget that you've got human stories behind all of this, all right? So I do think, while I don't like tariffs, I do think the idea that we need sharply lower asset prices in order to shrink the wealth gap in this country, houses, stocks, they need to come down lower. All of the gains since the money printing of COVID has gone to the top 10%, realistically the top 1%. The bottom 90 has been left with a higher cost of living and stagnant wages. We need asset price deflation to eventually lead to consumer price deflation and to give millennials and Gen Zers a chance, a prayer at maybe someday owning a home. So I agree that's necessary. We need that as a country, as a society, to preserve the social contract. That needs to happen. But that being said, along with these changes comes higher unemployment, comes more poverty, comes things that hurts the people that we're trying to help here. So it's important not to lose sight of that and not to be like, oh, well, it's good for the country. You got to remember what we're really talking about here. Take stock in this. And be careful with the way we do this. And what we got yesterday was not careful, guys. What we got yesterday was surgery with a sledgehammer. There's no way, there's no beating around the bush. That was a bludgeoning, those tariff rates that we got yesterday. Absolutely. Thank you very much, Beekeeper, for supporting the channel, sir. KDM, thank you. He says, it seems data centers might have potential to end up as a regulated utility, maybe with a push for high-speed fiber right to the residential location being installed in many cities. You know, KDM, I don't think the data centers are as necessary as we think. The one thing we've learned, like with DeepSeek, what they exposed, yeah, you need data centers to train the models, the initial building and training of the model. But once you've got an underlying foundational model, these distills that you can make, which is what DeepSeek really does, you can take that model, you can teach it to do one thing really well, and then you can run it on a local computer. You can run it on a laptop with a video game GPU. You don't need a data center. And most uses for AI aren't for these all-in-one massive large language model that can do everything. You need an AI that can do one task really well, really efficiently to save your company money. So I think they have massively overbuilt data centers. Yes, we need some of them and will continue to need them as AI evolves. but they, much like the fiber cables and the build out of server farms during the dot-com bubble, they just built way too much too fast because Silicon Valley can't help themselves. They're a bunch of bros who just overhype this crap time and time again. AI was the shiny new thing. Next, they'll do it with humanoid robots or quantum computing or time travel. Who knows whatever they're going to do. But there is a date with reality. And this AI bubble, all right, since November of 2022, when ChatGPT was first released, the S&P 500 market cap has grown by $17 trillion. It's probably a little lower today. $17 trillion bubble. There's never been anything like it. That much market cap unwinding, if it's disorderly, it's going to be brutal. And, you know, within this tariff story, you've got a bubble, a pre-existing bubble. Maybe tariffs is the pin, but the bubble was created with that AI mania. So I just don't think we need that many data centers, KDM. Thank you very much for supporting the channel, sir. Welco Services says, don't tariff my bacon. Your bacon is safe, Welco Services. We make our pigs right here in the good old US of A. What could be more America than bacon? That's the one thing I think will be spared. Some food like avocados, right? Sorry, millennials just get it every time. That's like your quintessential millennial food is avocados, right? We get our avocados from Mexico, guys. They're going to get more expensive. Outside of that, most food that we consume in this country is grown in this country. So we're safe from tariffs. That being said, if these countries start reciprocating, start retaliating with tariffs of their own, what they're going to be doing is driving up food prices for their own people. Most of the focus on the show and in the press here is on the effect on the American people of what this trade war is going to do. But remember, this is a war of attrition, and these tariffs are going to hurt those people in those other countries a hell of a lot more, in my opinion. It doesn't necessarily mean this is going to be a good thing. I think this is destructive. I think there are better ways to do this. But that's yesterday's argument. Fact of the matter is, we are in this trade war now, for better or worse. It's here. Might as well fight it to win it. I don't know how else to say it. Thank you very much, Welco Services, for supporting the channel. And thank you, Hunt and Cover, for the generosity, sir. I appreciate that very much. He says, tariff coffee for you and GG. All right. Thank you very much. Coffee will get more expensive. Oh, dear. Because we import most of our coffee, right? You got the Arabica, and I forget what the other blend is, but you got Brazil, Hawaii grows a lot, Asia grows a lot of coffee. The wake-up juice doth increase in price, guys. So I don't care. I'm not cutting back my coffee. Sorry. This channel is fueled by coffee, man, and we just won't be cutting back on our consumption here. So we're just going to have to find that cash somewhere else in the budget. Thank you so much, Hunt and Cover, for easing the burden of the more expensive coffee. I appreciate the super chat and the good vibes. All right, guys, we are going to be back at 4 p.m. Eastern time today because we got a special occasion. But thank you so much for having your coffee with the Melonheads this morning. Thanks, TK, for sneaking that one in at the last minute. When was the last limit down day for the market? That's going back to the vid, I believe, was the last time we triggered circuit breakers. I don't have that data point off the top of my head, but thank you, TK, for supporting the channel. Shout out to my magnanimous Melonheads on YouTube and Patreon. You guys rock. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Don't forget that like button and that subscribe button, and I'll see you guys at 4 p.m. Eastern time today. Till next time, live small and dream big.